Thank you. Thank you very much. Good morning, Alexandra, and all colleagues in the room. Indeed, Host Parent and others. Actually, thank you very much indeed for inviting me this morning here to start some remarks after you, Alexandra. Now, when I received the invitation for this discussion, as you may know, I'm head of the Capital Markets Union team in DG FISMA. Well, I was wondering why actually are you asking me to open this? I'm not indeed a pension expert. We have many of them in the room. I think I see just Fausto, of course, who is on the public side and many on the private side in a way. So that cannot be why you have invited myself here. Maybe it is because this is taking place in the Hanse office, and as Christoph knows, I'm myself not from Hamburg, but let's say from the greater region, I would say, from Lower Saxony. But then I thought, okay, that's probably also not the reason. So maybe the reason is that indeed this challenge of creating indeed a sustainable and adequate private retirement system, which is I think the topic of today here of the discussions, maybe it is because that is actually linked to the and it's part also of the broader challenge which we have in Europe, and which I think our president tried to also address with the idea of a savings and investment union, which is indeed how to really intermediate well savings and investment in Europe in a way that delivers indeed better outcomes, both for those who have the savings and those businesses also who need to do the investments in our economy. So if that is the reason why you have invited me actually to come today, then I will try indeed to spend some thoughts on this, which is indeed a challenge which has been outlined by Mr. Letta and Mr. Draghi in their very excellent reports, and which, as I mentioned already, our president, Ms. von der Leyen, has put as one of the priorities indeed in her political guidelines. And just yesterday, you saw indeed in the plenary debate in Strasbourg, when happily the new commission was finally confirmed, this issue and this challenge indeed of working quickly and fast to build a savings and investment union, and indeed to connect also savings and investments, was again mentioned quite prominently also by our president. So let me look at this topic, at this issue, the savings and investment union and the intermediation indeed between savings and investments, whether that is indeed for, let's say, just investments of citizens, let's say money in general, or whether that is particularly indeed to save for private pensions, is an idea like the Capital Markets Union indeed, which let's say put together the micro and the macro view, the perspective of individual citizens, the perspectives of individual businesses, but indeed also the overall, let's say, perspective of Europe and the needs of the European economy to stay actually competitive and up in the global environment. And that is not just the case because maybe here in Europe we have many macroeconomists who actually care, maybe as some would say, more about the bigger picture than about individual Europeans. No, it is also because actually for individual citizens and for people who are having third pillar and second pillar private pensions, it matters. There is no adequate requirement outcome. There's no adequate return for them ultimately if we don't connect their savings to profitable investment. And on the other hand, of course, there's no investment in our future without indeed stronger, more savings, stronger investment from our citizens of their money. So really, the two things go hand in hand. That's important for the economy as a whole, but it is also important for individual citizens and for savers who want to indeed rely and have a good, let's say, pension as they become older, and who may, and Alexander, you already pointed out the challenge, not always be able to rely indeed on the first pillar pensions. And this connection is also very clear if you look empirically at our member states, and we always like to not only look at the US, which of course is always, let's say, in many debates very present as an example for some, as a counterexample for others when you have a pension debate. But let's look also at our member states here, and it is not a coincidence that both Sweden and the Netherlands, who have very, let's say, well-developed pension and investment products, also have relatively well-developed capital markets. So this shows also empirically in Europe that the two things actually go together. So how can you then go get there? How to indeed develop savings and investment unions? How to develop further, indeed, give a kick to private pensions in Europe? Alexandra, I think you mentioned again very vividly also the challenge, and that we are not there. This is, of course, the question which also then our new commissioner, Mrs. Albuquerque, who was, of course, also yesterday confirmed together with the college, will have to find answers to. Let me just maybe mention three challenges here I want to quickly address. I think they are challenges specifically for pensions, but they're also challenges indeed for the broader discussion. And they are basically uptake, portfolio, and indeed the underlying infrastructure. Let me try to look at them one by one. The challenge of uptake, I think, is very clear. Too few Europeans still think about systematic savings early on. And that is a problem for indeed private retirement if public pensions are not sufficient. I think 39% that's the latest figure which I got from one of the trade associations of Europeans actually do not have any indeed private savings or systematic savings. That is 4 out of 10. And if you look at the gender distribution, I think Alexandra, you also mentioned the gender gap. I think for women the figures are even much higher. And this is a problem, of course, indeed, for getting good returns in the end and a good decent pension. But it's, of course, also a problem indeed if you want to look at capital market engagement, which is typically not something you can switch on and off from one year to the next, basically. But if you invest in capital markets, if you want to benefit from them, you need to have a long-term horizon. So if people don't start early on, then there is a limited point actually to go also receive also the benefits. So how can we address this challenge of uptake? I think financial literacy, first of all, is a very important part of this. And indeed, our commissioner will present a dedicated strategy on this, has been mandated to do so. Distribution, good, cost efficient, and also high quality distribution advice is important here. And Alexandra, I think you mentioned the question of value for money as well. And we have, I think, an ongoing discussion indeed on the retail investment strategy. What is good advice and distribution? But I would also want to add that indeed we have, let's say, both existing, but also new, let's say, opportunities here. The digital world brings many new possibilities, many new options indeed for citizens actually, and also many new opportunities and maybe ways for them to get, let's say, into touch and to be nudged into also at least thinking about long-term saving, retirement savings in other ways than just walking into a bank or speaking to your financial advisor. And I think those are many opportunities which working together, both the traditional and the new channels actually can be quite promising. I would want to add one last and very important group. The minister mentioned the importance of also occupational pensions. And indeed, I think employers are, as a matter of fact, one of the, let's say, contact groups with whom almost every European citizen who earns money in one way or another is in touch, basically, and are potential, let's say, also persons at least of with the longer term relationship. So indeed, the idea to also work more on occupational pensions, on the role of employers, indeed, in encouraging their employees to save and invest is also extremely important and something we need to actually further think about how we can encourage that further, because I think the good example from Hamburg, which the minister mentioned, is not necessarily representative across Europe. So those are just, I think, a few areas we should look at when it's about the challenge of uptake. The second challenge I mentioned is the challenge of the portfolio. Indeed, if you invest and save for your old age retirement, the outcome will only be there if you also have at least a decent return. And in that context, the outcome matters, the return matters. And in Europe, we, however, see still that only a very small part of indeed long-time savings is actually invested in equity instruments. So we actually do not have, I mean, the principle of risk management is always diversification. I think we don't have that. Many Europeans in their old age savings do not have that diversification. They have a lot of real estate, if they have, of course, the money in the first place. They have a lot of savings on their bank accounts, and they have very little or almost nothing in many cases on the equity markets. So while we're not advocating for pensions to be only served by equity markets, that would certainly not be wise, but equity investments, if you want to have a decent return, needs to be part of a good portfolio diversification. And so we need to work on the one hand, of course, with retail savers to make that clear, and to promote it through various ideas. For example, looking at the investment savings accounts, which some countries have in a quite promising way introduced. But we also need to work with the existing institutional investors, with the second and third pillar pension systems, and see whether they do not see a higher scope, indeed, also for broadening the asset classes in which they invest. And that is something which can work, of course, through the regulatory system. I know the industry is always fast in asking for less capital charges for certain investments, and then is promised that this automatically goes to higher investments. A discussion to be had. But we also need to look at actually risk management capacity. I think many also, for example, second pillar pension systems do not have necessarily even the risk management capacities to deal with other asset classes than the ones they actually invest in. And last but not least, we also need to look at providing the right products indeed for also pension funds, for example, to invest. And that is where, for example, also the public development banks, the EIB group at the European level, and the national development banks can also play an important role. And it links back to the idea which our president highlighted also in her political guidelines, the idea of risk absorption, that indeed also the public sector also needs to contribute indeed to let's say to make let's say a certain asset class and risk investable. And I would personally add, particularly, of course, if we want to encourage, and we think it's good that indeed our pension funds go more in this direction, then that's also a particular role I see here for the public sector. So that's some thoughts about the second challenge, which is the portfolio challenge, as I called it. And now the last one I want to mention is indeed the challenge of the underlying market infrastructure and the efficient markets. Of course, let's say pensioners, individuals, citizens, but also pension funds can only invest indeed in products which provide a good and decent return and outcome for pensioners if they have the right products, the right efficient markets actually to provide these products. And that sense, very often, I think we are faced with a situation where people are looking not to Europe, but actually to the US or other markets, which are considered more liquid, providing higher returns actually for the investments which you have. That is regrettable because we do urgently need the money in Europe, and we also think that Europe has quite a lot to offer. And this is, of course, then something where we need to look at from our side. Again, a couple of thoughts here. Basically, that's probably at the heart also of the idea of a savings and investment union, that we need to have overall, we need to work towards more integrated markets, which are more liquid, more efficient, and also provide indeed ultimately better deals, attractive outcomes, also attractive returns for citizens and for institutional investors, so that they don't feel the need anymore to run to the US because their markets are considered to provide better returns, higher efficiency, or other advantages. It is not something we can force on. I think we can work with member states indeed about the incentives, and that is a discussion we're having. Tax incentives which are in place in some countries, other types of incentives. And of course, we also need to, let's say, provide the right products. Once again, clear, good European products are necessary. The PEP was mentioned, others could be added. But it is also about making indeed the European markets more attractive investment. And if that's the case, I know very much, as a matter of fact, that indeed pension funds are some of the most active users actually of European capital markets, also of cross-border capital markets. I have a friend who works in an investment bank and who says that the second pillar pension funds from one particular member state, which I don't want to mention, are always the most informed, the most sophisticated investors actually trying to benefit from European markets. And I think that is for me a good thing. And we need to probably make sure that then they also find the right products in Europe, and that probably more pension funds also are on that, working in that direction. So I think those are, let's say, three big challenges. The way I phrase them, you can phrase them in a different way. How to get there, I think that's the discussion you will have here today with many prominent speakers, panelists. My colleague Tilman Lüder will discuss with you in detail. I think from the perspective of the Savings and Investment Union, let me just mention a couple of points going forward, where this is, of course, something which the new Commission will now have to also decide. I think the first point is that we need to build on what has already been achieved. PEP was mentioned before, and I think we have many people who always say this is debt upon arrival. I think Alexandra just pointed out that maybe it's just a bit too early to cry foul, and we need to continue to see how we can further develop this. The same is true for many other, I think, positive policy achievements we've reached in Europe over the last years. Whether that is on capital market data, whether that is on structure of capital markets, whether that is on indeed other areas of pension policy, and build on that basically. I think the second point which will be important is to work together hand in hand with the national and the European level. I think pensions are, as a matter of fact, something which has a strong national dimension, and retail savings at large, I would say, is something where cultural differences, even from one country to the other, are quite big. So we cannot work here with just a single set of European rules, the same say recipe for everybody from Stockholm to Lisbon. But we need to see where can Europe provide added value, and where indeed also do the member states have to play their role. And I think we are in a good way there here with processes which have been ongoing here in Brussels, also in the Eurogroup and other fora. And on our side, we are right now, actually, our directors are visiting all the member states to really discuss and understand what's happening in these areas of savings and investments. And actually, we see many encouraging projects. Many member states who are working towards more, let's say, retail investor engagement, more, let's say, long-term savings. So I think that's definitely something we can build on. And then, but last but not least, of course, we will have to look at the European level at a few, let's say, important levers for change who can further accelerate indeed the development and act a bit as a game changer as well. So I think that will be the challenge for the new Commission to find them and to agree them together with the member states, with the European Parliament, with all the stakeholders. In that sense, it is great that for the event today here, we have actually a number of, let's say, co-organizers coming from different parts in a way, Better Finance, the CFA and FESE. And I think we're looking forward very much indeed to the continued dialogue with all of you and all the people in the room on these matters.